I really started to appreciate the fact that we have our own money now and it's not centrally controlled. It's not controlled by governments or banks or anything like that. I mean, the technology is interesting, but it's the movement, it's the network, right? What gives money power is the network. And I believe that by the end of the year, we will see at least one nation state announcing that they've been accumulating Bitcoin, but have been shy to say that because they didn't want to send the price up for themselves.
Hello, and welcome to the first episode of the Achieving Alpha podcast. My name is Stephen, and I am the host of the show. What I'm trying to achieve on the podcast is to provide a great investing education for the listeners. For the first episode, I'm pleased to welcome Mati Greenspan, who is the CEO of Quantum Economics and the CFO of Quantum Expeditions. Mati is a cryptocurrency executive, having founded a number of companies in the space. Welcome to the podcast, Mati. It's really great to have you here.
Thanks a lot for having me, Stephen. Very honored to be the first.
Thanks, Mati. So if you could just explain to the audience a little bit about your background and how you got into Bitcoin and some of the reasons why you made it a really important part of your career and why you went all in on crypto.
Sure. So I've been in the financial markets my entire life, and I was building a career in online trading, brokerage, and analysis. I've been at FX, B4X, and eToro was, a logical next step. It was a small company at the time with a very innovative product, gamifying Forex and bringing it to the masses. I started there in July of 2012, and then March of 2013, the CEO Yoni Asya, who's always, had one foot in the future, sends out an email about Bitcoin and what's Bitcoin and why it's awesome and how the decentralized properties make it impervious to attack. And yeah, I started looking at it, and I really fell in love right at the beginning. Somebody who had front row tickets to the financial crisis of 2008. I was actually like in an online broker at the time. I really started to appreciate the fact that we have our own money now and it's not centrally controlled. It's not controlled by governments or banks or anything like that. And I said, hey guys, the internet has money. I had seen the famous interview with Milton Friedman where he was talking about the future of money on the internet and that you could hand somebody a $20 bill, just like, or you could make an online transaction just like handing somebody a $20 bill. And I remembered that it made an impression on me. And yeah, so I went to Facebook and I said, "Hey, everybody, Bitcoin is here. It's the money of the internet. It's the money of the future." And like crickets, it was like nobody reacted. Like I was getting 50 to 100 likes on each post on Facebook at the time, and there was like 7 likes. And I'm like, what's going on here? Like people are not as excited as me about the money of the future. Clearly, it was only like later that I really realized that there wasn't just a non-excitement, but the entire financial community and even the press was extremely negative about it and extremely pessimistic. And I didn't understand why, but I kept analyzing it, and then I kept it on my watch list, and as incorporated into my financial analysis. And as my career grew, it crypto took more and more over time to the point where we got to 2017 and that bull run. I had the pleasure of leading the charge as far as explaining to people, customers at eToro, and people in the press and newbies, like what is Bitcoin and what's the value of it and how does it work and everything like that.
Okay, great. And what was the properties that kind of really attracted you to Bitcoin when you first saw it?
So I was just thrilled that we get our own money now. that was the bottom line. For me, it's not just about the technology. I mean, the technology is interesting, but it's the movement, it's the network, right? What gives money power is the network. It's not the technology. Technology doesn't give money anything. It's people, and people are the ones who attribute value to items or especially money. So that was what attracted me, is that now, we don't have to, we have a form of money. Doesn't matter what the value is, but it is independent of the governments and banks, which basically makes it cleaner money, non-susceptible to corruption, non-susceptible to massive money printing and stuff like that it has a very fixed release schedule and a rate of inflation that is known in advance. Whereas, I had seen firsthand all of the problems that led to the 2008 financial crisis, understood well before the movie Wall Street, or what was the Big Short, right? The Big Short came out, and then everybody suddenly understood what I'd known the entire time, and I understood that Bitcoin is a solution to that, and that's what really attracted me.
I think I was most attracted by the fact that there's only ever going to be 21 million Bitcoin, and the real scarcity of the hard asset. Because as we both know, the governments really do like to fire up the money printer, and it is obviously becoming devalued over time, and our purchasing power is really affected. So I think that was the main thing that attracted me to Bitcoin. But I think, as you agree, Mati, everybody has a different reason for being in Bitcoin. Bitcoin is more than just kind of one thing to everybody. I think different people have different viewpoints on why they like it.
Absolutely, they do.
So I wanted to talk to you a little bit about what's been happening so far in this cycle. And Bitcoin hit an all-time high for the very first time before a halving in the 4-year cycle. Do you have a theory on why you think Bitcoin might have done that for the very first cycle ever, and how this cycle might be different to previous cycles? So, for example, do you think it's going to be a left transition cycle where the gains might be at the start of the cycle and then slow down? Or do you think it might be diminishing returns? Or do you think it might be some type of super cycle? I'd be interested to hear your thoughts.
It is an interesting question. And to preface, I want to just say that, as a licensed portfolio manager, anytime that we talk about the charts, chart history, or anything like that, we do need to give the disclaimer that past performance does not indicate future results. When you're looking at the charts, you're looking at the past. So what happens in the future can be changed by many, many factors that are not ever going to appear on your chart, and therefore we can't predict the future. I can't predict the future. It would be foolish. I can give scenarios, what's the most likely thing, what's happened until now, the narrative, framing it, all of those type of things. But what will happen from here, I don't know. Even if you see me tweet, for example, at the moment I have the tweet posted at the on my Twitter portfolio, or my Twitter profile, it's not a prediction. I'm projecting. I'm saying, okay, I hope that this happens, but there's no way that I could ever hope to imagine.
None of us have a crystal ball.
Absolutely. That said, we can frame it in what's happening in the background and in the global macroeconomic, environment, and what's happened previous cycles. We call them cycles, which I'm assuming that you're referring to the 4-year halving cycle, in which Bitcoin has until now kind of played out in a very similar fashion over 3 cycles of 4 years each, which is quite interesting. And I wouldn't call it a coincidence, because it is by design that when the halving happens, digital scarcity increases, right? Like we mentioned, the rate of inflation of Bitcoin is known in advance. It really boils my blood to see people like Plan B out there getting lots and lots of followers and attention by trying to predict the future and then being wrong every time. And I'm not gonna. I'm sorry I named him, but I picked on him because there are dozens and dozens of people doing this out there, and they are all. If you hear somebody trying to do that, just know that they're a scammer, they're a grifter. They don't know. Nobody knows. So. But with that said, what that means for me as a Bitcoin miner, because we do have the Quantum Expeditions, my Bitcoin mining company, which is quite successful, is that every 4 years, the incoming supply of Bitcoin is going to be cut in half. And on April 20th or April 19th, there was approximately 900 Bitcoin being produced every day. And now there's only 450 Bitcoin being produced every day. And in order to support that, and Satoshi's ultimate design for doing something like that was that in order for the network to continue operating as normal, the price is going to have to double every 4 years in order to keep the mining industry as a sustainable mechanism. Or the mining industry will have to come and adjust and make adjustments, which is basically what's happening now. So the fact that it doubled before the halving this year, to me, is a sign that people understand Bitcoin better. Institutions now understand Bitcoin better, and they're able to foresee an event, right? There's a famous saying in the market that everybody knows is buy the rumor, sell the fact, right? When you have a rumor that something's about to happen in the market, then you buy it up, and then after it happens, then you go ahead and sell it because you've made your return on it, and now it's time to collect that return. In this case, it's not a rumor. Like we knew that the halving was going to happen, right? We knew when it was going to happen, and therefore traders were able to anticipate that and kind of collect in advance their rewards for accurately depicting that the price of Bitcoin needs to come up in order to reflect the new value of the coin.
Yeah, I mean it's quite remarkable how it happened after the last couple of cycles. How it's usually been about 6 months after the halving that we've traditionally seen all-time highs, but that was the first cycle that it's actually happened previously before that. So be interesting to see how the rest of the cycle pans out. I wanted to talk to you about some of the major catalysts for this cycle and what could bring up the Bitcoin price. One thing I wanted to talk to you about was the Bitcoin spot ETFs that were approved at the beginning of the year. Were you quite surprised as an analyst to see the type of demand that we've seen from Wall Street and some of the buying pressure that we've seen for BlackRock, from Fidelity, and the other ETFs? Were the inflows bigger than you originally expected?
Absolutely, they were. I was expecting that there'd be some very large inflows in the first few days due to like pent up demand and money that had been earmarked or reallocated for the ETFs. But to hear Larry Fink, the CEO of BlackRock, stating unabashedly that not only is IBIT, their Bitcoin spot ETF, one of the most popular Bitcoin products, but that IBIT is the most popular ETF in the history of ETFs. That was quite an awesome moment for me as a Bitcoin advocate.
Yeah, those ETF inflows, I think, surpassed most analysts' expectations by an order of magnitude. So, what do you think's next in terms of corporate adoption? So, we're talking about, I think, right at the moment, I think a lot of those inflows into the spot ETFs are mainly from either retail investors or they're by kind of small family hedge funds or offices. Do you expect those inflows to increase quite dramatically once you get approval from the pension funds and from other really large hedge funds or other management companies? Do you expect those inflows to gradually increase as time goes on?
Yeah, so this is something that I said on Bloomberg Television in 2000, April 2018. Along with the cycles are different audiences, right? So 2013 is the early adopters, right, when I got in, and 2017 is the retail investors, right? There was a massive influx from retail when the price started going up and shooting to the moon. People started taking note, and that's when people really started understanding the lessons of 2008 and the need for an independent currency. And then 2021 is the institutional adoption. That's when Wall Street really was able to get in a significant way and understand what DeFi is and how it's going to eventually replace them. This upcoming cycle, if you haven't guessed already from what I've been saying, will be the nation state adoption, meaning that nation states will be adding Bitcoin to their balance sheet because there is no other that they can really use in the same way as Bitcoin. Gold is gold's market cap is about 10 times that of Bitcoin at the moment. And if nation states are wanting to protect themselves from mass devaluation of all fiat currencies, which is happening at an alarming rate, and the currency wars between China and the U.S., which no nations really want to be a part of, but they have to manage their books somehow. If they want to be a part of um, the global economy on the internet, which has now firmly adopted Bitcoin as its money. I mean, if I'm using a contractor anywhere in the world, I know that they're going to be preferring Bitcoin as payment 9 times out of 10. And if they want to be a part of that, they're going to be adding Bitcoin to their balance sheets, similar to the way that they added gold to their balance sheets in 2009 when the Fed first announced their quantitative easing money printing program. And we saw gold rising for 3 years after that as all of the nation states clamored to accumulate. Our Bitcoin mining company has been contacted very recently by one of those nation states. I'm not going to say which one, which is a very rich country, very well known country in the Middle East. And they had been talking to us about building a large scale Bitcoin mining facility on behalf of the local government there. So yeah, that's happening. It's happening very quickly, and I believe that by the end of the year, we will see at least one nation state announcing that they've been accumulating Bitcoin, but have been shy to say that because they didn't want to send the price up for themselves.
I think it could increase the price pretty significantly when that type of news is released. Yeah, I'm wondering whether this. Have you ever heard of the Mr. 100, the person that's been buying up 100 Bitcoin very regularly? There's a lot of rumors whether that could potentially be a nation state buying.
I don't know, Mr. 100. I'm not familiar with that one.
Yeah. Anyway, I think if they're either buying right now or they're going to be buying very soon. Why do you think that some countries will choose to mine Bitcoin in order to get more Bitcoin, or why do you think some countries will just choose to buy Bitcoin for the sovereign wealth funds instead?
That is an interesting question, and the way that you framed it is a bit different than the way I'm used to hearing this question, which is, in the context of quantum expeditions and our crowd fund, and people ask us, why should I invest in quantum expeditions, Bitcoin mining, rather than just buying Bitcoin itself? And well, the answer is, first of all, can and should hold Bitcoin itself and invest in that. That makes a lot of sense. But Bitcoin mining is an additional way to diversify your portfolio and become part of a huge growth potential opportunity for a nation state. And so let's just preface, like, what do you need to do in order to be a Bitcoin miner? So first of all, Bitcoin miners have the advantage of being able to purchase Bitcoin much below the current market rate, right? When we mine Bitcoin, right, we're actually paying less per coin, much less, significantly less per coin than we would if we would buy it on the market. And what do you need to do in order to do that? You need several things. First of all, you need to have a good understanding of Bitcoin mining and the machinery involved, and what conditions those machines need to be in. And you have to have the talent to, who knows how to plug them in, unplug them, set up all the software and everything like that. That type of talent can be acquired, which is why they reach out to people like us who already have this expertise. But what they really need, and what any Bitcoin miner always really needs, is access to cheap and reliable electricity. So, if a nation state has an abundance of cheap and reliable electricity, then it's going to make sense for them to mine.
Which they clearly do in the Middle East. Interesting. Okay. And the other potential catalyst that I wanted to talk to you about is about the corporate treasury. So corporate companies potentially buying Bitcoin for their balance sheet, a little bit like Michael Saylor has done over the last couple of years. Um, I've read recently that the FASB rules in the US are likely to change they they will change at the end of this year. Do you think that there could be a big influx of corporate companies putting Bitcoin on their balance sheet once those rules are changed? And do you think there's anything else that could potentially be stopping them from doing that?
Yeah. I think even Jack Dorsey recently announced that they'd be holding a lot of their cash in Bitcoin. I'm not sure I don't remember what the numbers are, but quantum economics has been managing our books in Bitcoin terms since we're founded in 2021. Yeah, so definitely something that I believe is quite exciting. I don't believe that many so a company needs to understand because companies think differently than human beings. Generally speaking, they're a lot more diversified in their thought because it's not just one person who might have whims or there's usually a corporate structure which includes a decision making process. And that decision making process is generally very hyper focused on the purpose of the company and how to maximize profit potential for the company given that purpose. And for many companies, the answer is going to be immediately no, thank you. That's not what we do. It's not in our business model. In case in point, even quantum expeditions, when we first started out, we were receiving investment money in our seed round. We raised $350,000, and that was when Bitcoin was crashing, right? Bitcoin was literally, it was the days of Terra Luna, and pre FTX and Celsius.
Don't remind me.
Yeah, very painful times for all of us. And our corporate decision at that time was to take all of that money that had been coming in, some of it in USDT, some of it in Ethereum, some of it in Bitcoin, some of it in fiat, was to convert 100% of it into dollars. And that decision saved us, like really saved us, because had we taken that volatility risk early on, it would, those operating expense. I mean, by now it would have been, in retrospect, a good decision if we were just hodling. But all of the early operating expenses that we incurred would have been at a much, much higher cost when Bitcoin was sitting at $16,000 to $18,000 per coin. So yeah, so I think that companies are going to get smarter about it, but I don't think that most companies are involved in trading as such. So I believe that as Bitcoin becomes more of a form of payment for companies and stuff like that, companies that are dealing with Bitcoin naturally will be more likely to hold that Bitcoin. But companies that have nothing to do with Bitcoin, I don't believe that they're suddenly going to go, hey, we should make an investment if they're not an investment company.
Yeah, I suppose it depends what type of return they want and whether they're willing to weather the volatility. But you're right, they're not specifically in this industry, so they're less likely. I think another thing is as well, I think a lot of these companies kind of benchmark against each other. So I think it's going to take quite a few to dip their toes in the water before that happens. So that could be a little bit of a further out catalyst than some people think, but it also could be very impactful when it actually does happen.
I think it'll happen gradually. Especially like I mentioned, Jack Dorsey, it's a natural thing for him to say, okay, yeah, we're keeping a balance in Bitcoin. Michael Saylor is definitely a pioneer, but I think that for some companies, it's going to be a hard no as soon as it comes up, and rightfully so.
As humans, we very rightfully, what we do is we overestimate what happens in 1 or 2 year periods and then severely underestimate what happens over decades. And it could be the case for corporate treasuries in Bitcoin. It could happen a little bit later, but then come in massive waves. Any concerns that you might worry about for this particular cycle? Anything that we need to be careful about? Anything we need to watch which could derail a bull run during this bull cycle?
Absolutely, yes, and thanks for bringing it up. It's not something that I've been talking about too much lately, but the inverted yield curve that we mentioned earlier on this call is extremely concerning. And the way that the economy has been playing out over the course of this year so far has not been as expected. And when we came into 2024, there was a lot of excitement around the Fed and the potential rate cut regimen that we might be seeing throughout this year. I think that in January, forecasts were, three or four rate cuts throughout the year. We haven't seen one yet, and we're not likely to see one within the coming months, meaning that there might be just one rate cut this year instead of three or four, possibly none. And there are even some analysts out there who are predicting that we'll see a rate increase before we see any cuts. And that's, inflation hasn't been coming down as the Fed's been wanting it to. Things have not been getting better in the economy. And we were also hoping that because this is an election year, that the Fed would be a bit more light-handed with the economy, provide a bit more free money. They have not. They haven't. They haven't been cooperating. Jerome Powell, for his part, has been very steady and very hawkish, where many assumed that he would be dovish. Warren Buffett has been moving to cash, which generally happens before a big market downturn. And therefore, I believe that it's entirely possible that macroeconomic forces are not necessarily going to be as conducive to this Super Bowl run that everybody's been expecting lately.
Yeah. So do you think that a lot of the Bitcoin price for this future potential bull run, do you think a lot of it will be because of the liquidity cycle and the amount of liquidity overall in the market? Because I think one of the things that what I've noticed in past bull markets is what we've seen is when there's a lot of money flowing around in the market and when the governments are printing a lot of money and increasing the M2 supply, we tend to see a little bit of a delayed reaction and then an increase in the Bitcoin price after that, once the money flows into the economy and we saw more liquidity. Do you think that if they either hold the rates as they are or for a period of time, or they cut less quickly than people expect, do you think that that could really be quite negative on the price?
Yes, I think it has the potential to, yeah.
Do you think that the US elections at all are going to weigh on the price of Bitcoin? Because do you think it really matters whether it's Biden or Trump voted into the White House, or do you think Bitcoin is politically neutral?
Yeah, it will have an impact on the short term. What exactly that impact is going to be is difficult to say. I couldn't say, Biden good, Trump bad, or vice versa. I mean, I know who I'm going to be voting for, but it doesn't necessarily have to do with the price of Bitcoin. But in the long term, it doesn't matter. In the long term, Bitcoin is irreversible. Adoption will continue to grow, and the more governments try to fight it, the faster it will grow, like a Chinese finger trap. Having a good, stable economy is something that we should all pray for on a daily basis, and I do. And Bitcoin is a safeguard in case we do not have that stable economy.
I actually really agree with you there, Matty, because as you see on crypto Twitter and other places, you often see people tweeting about the downfall of the modern world and every system breaking and Bitcoin being the savior, etc. I think sometimes we have to be really careful what we actually wish for, because that is not a good scenario in the very slightest, is it?
Yeah, yeah, exactly. Like Bitcoin reaches $1 million, but a loaf of bread costs $500,000. So, nah, I'm not. I'm not buying it. I can see that happening, but I'd rather it not.
I have my own theories on why the Bitcoin transaction fees are really high. There's a lot of people saying it's because of ordinals and other things operating on the Bitcoin network. What's your views on the Bitcoin transaction fees being high at the moment? And do you think that they might stay there?
Well, I'd like to hear your theory first, Stephen. Yeah, can I hear your theory before I answer?
Well, I would think it's a lot to do with ordinals. That would be my main reason why I think transaction fees are really high. But they've always been quite high because of the small block space. But I think they've increased over the last couple of months in particular. So I'd be quite interested to see your views on why you think that they've increased.
Yeah, it absolutely has to do with the ordinals and the runes and the excitement around that. So what's happening now is people are starting to inscribe files onto the Bitcoin blockchain. And these type of files, even like, a Bitcoin block is only 1 megabyte, right? So I don't know how familiar you are with file sizes, but 1 megabyte is not all that much. Like, and that's if you want to take a whole block. So even if you're just at like a few kilobytes, right, and you want to take an image and inscribe it onto the Bitcoin blockchain, already that's getting very expensive. So what we're learning from all of this is that block space is expensive, and especially on Bitcoin itself, on the main chain, you're getting what you're buying in that block space is permanence, right? If you save a file on your hard drive, you don't get permanence because eventually you're going to going to reboot that computer, you're going to throw it away or whatever. You might back it up onto a disk on key or whatever, but even that disk on key is not a permanent storage, right? And with Bitcoin, you're basically assured that your file is going to last forever, and it was going to be in the public domain forever. And that is a awesome prospect and something, a value proposition that has never been before. There's never been any kind of storage that has had the security and the provenance that Bitcoin has. So with that, I would say that yeah, this especially, and we can see it on the chart, right? With that, when the halving came, there was a lot of excitement around the runes and the ordinals, and everybody wanted to be the first one to mint on the halving block. And we can see that Bitcoin fees have spiked nearly to, this is an average Bitcoin fee, nearly to $130 per transaction. They've somewhat normalized now. I mean, at the moment, you're paying. I think I sent the transaction yesterday for $4.20 fee. I could have paid less than that if I would, but I wanted the transaction to go through a bit quicker. But that's the average fee. So I could have also paid $20 to have it go through immediately, right? But yeah, that spike on the chart that happened on halving day is that's going to be visible. That's going to be visible for 100 years forward, right? On as far as like where we go and where we're coming from. But yeah, so definitely that's where it came from, and where it's going from here. I can't really say. I think that the network has a good way of normalizing those type of transaction fees over time, even though people are still minting ordinals and still minting runes. The network kind of gets used to it, and the transaction fees tend to come down over time. It's just only when there's a lot of hype and an influx of new transactions and new transaction types that are coming into the network all at one time, that's when we really see the fees starting to go up. And I mean, you mentioned that it makes it difficult for people. I don't think so. I mean, I heard some of the ordinal proponents like kind of like jokingly say, "Oh my gosh, yeah, somebody in Argentina or Nigeria is going to starve because we're doing ordinals." Like, there is that's like blown way out of proportion. I have seen cases where yes, people were trying to transact $100 and they ended up having to pay $40 for a transaction fee. That sucks. Okay, so first of all, you don't have to do that. There's like very few scenarios where you have to pay $40 for a transaction fee at this point, right? You can, I mean, you can get away with a $2 transaction fee at the moment, and your transaction will still go through. It'll just take longer, right? So if you can wait a day for the transaction to go through, you're not paying. If you want to, so and then you can wait out the hype, right? If you're not a motivated seller, you don't have to sell your Bitcoin right now today. You just wait for the transaction fees to normalize again, wait out the hype, and you can send it at a normal transaction fee. And then there are other networks. There are networks on Binance, on Tron, on Solana that you can send stable coins or even native coins for fractions of a penny, Polygon and others, where you don't have to, and especially if you have your payment rails set up, you have who you're dealing with on the other end, and they're comfortable receiving a different currency than Bitcoin. That's a great way to also avoid transaction fees, and I do that quite frequently as well, even though I certainly prefer dealing with main chain Bitcoin.
Yeah. I do think though that it is pointless complaining about transaction fees, because I think if we want to use the base layer, as you said, we can choose certain times that we want to transfer money from one place to another. We shouldn't be totally relying on doing it at a very specific time. I think we should be able to do it when we want. And I think we all advocate that it's a free network that we should be able to use in the way that we want it to be used. So, I mean, who are we as certain people to say that they shouldn't be using Bitcoin for ordinals when it's supposed to be free for people to make up their mind how they want to use the network? Do you agree with that?
That is the exact Yeah, I actually not only I agree, that was the exact point that brought me over to the ordinals, because I was against it at first. I was using Bitcoin for my own purposes, like sending $20 to $50 halfway around the world, and then suddenly, it costs 15, $20 for a transaction, and I'm like, oh shit, like what the hell are you guys doing over here? Stop it, cut it out, you're ruining Bitcoin. And then I started talking to the ordinal people, and my purpose was to get them to back down, and they were not backing down. In fact, they tell me, "Man, you can't stop us." So like they started laughing at me. I'm like, "Oh, well, actually when they said that, it resonated because I understood that I don't want to censor them, in the same way that I wouldn't want Bitcoin maximalists to come and censor me. And those guys can be pretty insane sometimes. Yeah. And I like, you can't tell me, and I used that line on them. I said, you cannot tell me how to use Bitcoin. Like it is an open network. And as soon as they said that to me, I understood where they're coming from. And I said, okay, well, I don't want to censor anybody. I want Bitcoin to remain an open and free network as it is. And once the ordinals were created, you can't put Pandora back into the box. Bitcoin is going to be a change. And as soon as I came to that decision, that was just over a year ago now. I went and I bought a few of the OG series ordinals because I said, okay, I want to be part of that. I want to be part of that change in Bitcoin.
I would say I'm just very neutral on the whole subject. I'm not pro ordinals and I'm not against ordinals. I just think people should be able to use a network in the way that they want to use the network. And and I think we both agree that right now, at this time where we are with Bitcoin, it's very unlikely that people are going to be using the base chain to buy coffee and to buy very small goods, which would obviously incur a bigger fee than the actual cost of the good. I don't think that's should happen or is going to happen on the current network without like a layer two solution. What's your views on layer twos on Bitcoin, like Lightning, and do you think it's required?
Yeah, we definitely looked at using the Lightning Network for managing our books and payroll for quantum expeditions. And it came out to like, okay, we'd be saving maybe 50 to $100 in transaction fees, maybe 150, if things really got out of hand. But we'd be adding significant time, like in a few hours a month, possibly, in just going back and forth and implementing a procedure. And it just like, let's not be ridiculous here. Like Bitcoin's transaction fees are not that excessive that we will have to go to those type of measures to avoid them. And hey, we're paying ourselves at the end of the day, right? That's money that's going into the network and going into the mining, back into the mining industry. But I have never been a fan of Lightning Network, not since the first time that I ever touched it. I don't know if you remember, I believe it was around 2019, there was this Bitcoin Lightning torch that was passed around.
Oh, I remember that. That was Hodlnaut, right? Who started that?
Yeah, Hodlnaut, that's right. He started that. I was the second to last bearer of the torch just before it went to Venezuela. And yeah, I remember the process of opening a Bitcoin wallet, and it had to be a Lightning compatible wallet, and getting Bitcoin onto the Bitcoin Lightning network and just managing that. It was just a nightmare. The invoicing system was just terrible, and still is. And yeah, I don't like it because the user experience is horrible, and it's not the same as mainnet Bitcoin. It's just not. It's not. What you're holding is a shadow of a Bitcoin and not the actual Bitcoin itself. And to me, that doesn't really bode well. So, and suffice it to say, I'm not a fan of Bitcoin Lightning, and I don't think that the adoption is going to suddenly pick up uh, because it's been out there for a long time. The user journey is just horrible, and though it might be a solution for some people, I've seen it breaking, I've seen it bending, I've seen all kind of horror stories with it that it just makes me not want to touch it.
Yeah, I think it might be needed in the future, but if we're really to have it and it's going to be successful, it needs to work really seamlessly. Like behind the, we don't care how the television works, what's behind the television. We only care how well the television works and how easy it is. All right, so I wanted to move on and talk about a little bit more about the companies that you are currently running. Talk a little bit about Quantum Expeditions. I believe this is a new mining company that you have set up. Where is the mining taking place, and what was your kind of rationale behind starting a Bitcoin mining company?
Yeah, absolutely. So when I left eToro in 2019, we started Quantum Economics, which is quantumeconomics.io. Is a firm for research and advisory in the crypto space. It's basically an umbrella company for all of my partners, and we have just an amazing team there of analysts and researchers, and even like a lot of movers and shakers, people who are in very prominent positions in the crypto space. And it just has become this kind of like platform for startups and startup incubation and stuff like that. And Quantum Expeditions is our first spin-off company from Quantum Economics. We were doing a lot of research around Bitcoin mining in 2021. It was a huge topic in the news about how much energy it was using, and is it green or is it friendly to the environment? And people like were throwing all kind of accusations about Bitcoin being bad for the environment. And we thought that was ludicrous, of course. So we started doing the research and we started publishing a lot of pieces. And at some point, we had gained enough dominance within that industry that one of our senior members in quantum economics came to me and said, "Hey, look, I really want to start a mining company. I've been thinking about this for a while. I've got a lot of resources and contacts, and we've been playing with the models. I think that with quantum economics, we can just go for it and start a company." And that's what happened. Oz Sultan and I found we then went and looked. We find an amazing CEO, and we did. We found Doug Hardwick, who's 20 years in the oil and gas industry in the Permian Basin in Texas, and has all the contacts required to get something like that off the ground. Because biggest thing that we're going to need is energy, right? Biggest thing is, like we said, cheap and reliable electricity. So yeah, we founded Quantum Expeditions in 2011, and it's November 11th, which is the exact day that Bitcoin hit that famous all-time high of $69,420 per coin. And we raised the seed round. Last November, we acquired Badgerland Crypto Mining Club, which is, if you're familiar with Justin Kramer, he's a very well known person in the Bitcoin mining industry. And he's now our chief operating officer on Quantum Expeditions. And we're running a crowd fund where investors from anywhere in the world can get into and buy a piece of Quantum Expeditions for as little as $100. And you can see that on wefunder.com/quantum expeditions. We've already raised more than $400,000 from 500 different investors, and putting that money to good use, buying machinery and expanding our operation. And I'm very proud to say that, as somebody who's been in the startup world for a very long time, that we're a profitable entity after just 2 years since our founding, and that is not an easy feat.
Okay, excellent. And can you tell me a little bit about some of the economics of mining and some of the things that it entails about? Obviously, you have to make a decision about the type of equipment, type of mining rigs that you buy, and obviously when you run the machines, etc. Can you just talk me a little bit through the process of making a good decision or when setting up a mining facility or a mining rig?
Yeah, I mean, it's all about stability at the end of the day, right? You need to know that the government's not going to turn around and mess you over, or the local mafia is not going to turn around and mess you over, right? And in Texas, we found that the government is extremely friendly towards Bitcoin, and they're a very progressive state. They understand the income that's being generated, and that's where the research had led us. I mean, even before we founded, we knew that Texas was where we wanted to be. Where as soon as China kicked out all of their Bitcoin miners, we understood that things were moving to Texas, and that's where we went. So that's why we looked. That's why we found Doug, who's specifically on the ground over there. Um, but yeah, it just makes a lot of sense from that perspective. I mean, sure, you can probably get electricity for cheaper if you go to like countries that have political instability, or less resources and stuff like that. But all of our talent that we found and everything is in the United States for exactly for that purpose. Is that we understand that this is the right place to be at the right time.
Okay, excellent. And can you tell me a little bit about some of the economics of mining and some of the things that it entails about? Obviously, you have to make a decision about the type of equipment, type of mining rigs that you buy, and obviously when you run the machines, etc. Can you just talk me a little bit through the process of making a good decision on when setting up a mining facility or a mining rig?
Yeah, it's not as easy as it was in 2013. Back then, you can just run the program on your laptop, and in the morning you have 60 bitcoins, and you can go and sell them on the market for a few pennies a piece, like a pleb. Sure, yeah, but no, there's a lot that goes into it. You know, Clearly, like there's many different ways to do it. So I'm not sure I could explain it all in one sitting, but suffice to say, you go out and buy the machinery. These at the moment we're purchasing S21s, which are the latest and greatest by Bitmain, and plugging them in at the cheapest possible electricity. Make sure that your electricity, your network connectivity are all ship shape, and that your network is sound and secure and running optimally. So it really it's a lot like running a data center, I would say. And yeah, that's basically how it goes.
And is it a very profitable business at the moment? So obviously we've just had the halving, so the block rewards for mining have obviously cut in half. Did that have a big effect on your business? Obviously, you knew it was going to happen, so you could prepare for it in advance. But did you simply just buy more hash power, buy more rigs in order to get a similar amount of Bitcoin, or did it have an effect on your business?
Yeah, that's an interesting question. And what we did was actually we didn't start. We knew that the prices were coming down. And had we started after raising our seed round and started plugging in machinery, we would have been buying S19s, at $20,000 a piece, or $15 to $20,000 a piece, that are now, selling for $2,000 or less on the market. So even if we would have been mining this entire time, the depreciation on those machines would have eventually killed us. So we react to the market and understand where it's headed as much as possible, and we take the opportunities that are presented to us. So case in point, we did buy a bunch of S19s back in November because the S21s just weren't out yet, and we wanted to get started right away. Those machines have, I would say, we haven't done the math recently, but more than likely kind of paid for themselves already. And well, I'd say they paid off half of themselves already. And so it's just a matter of, for us, rolling with the punches. And gauging what the market is doing. And yeah, if we do find ourselves in another unfortunate bear market, then we're going to have to react to that as well. And there are ways that we can react to that, and we make sure that we remain profitable even throughout. But we make sure that at the beginning of the cycle, or when prices are low, that's when we're expanding the most. During a bear market is not really the time that you want to expand a Bitcoin mining operation, but rather, just kind of even possibly downsizing, or getting rid of machinery if you can. And we certainly have that option, but we're not there right now. At this point in time, we feel that there might be a pullback in the market, and therefore we're not expanding at full steam ahead. But we also believe that we're quite early in the cycle, and therefore we are expanding and adding machinery at a moderate pace right now. Yeah, we do have an announcement coming up. Unfortunately, I can't share too much. The SEC's rules regarding crowdfunds are very strict, and all announcements have to be made through the Wefunder page. So if you go to the Wefunder page, there's an updates tab, and that's where we'll be making any sort of announcements regarding additional revenue streams, additional sites that will be opening, and things like that.
And can you just repeat for the listeners, Mati, if anybody did want to get involved in the crowdfund, how would they be able to invest, and kind of what's the process, and potentially what do they get for their investment?
Of course. So you can see our homepage, which is quantumexpeditions.com. I highly recommend clicking our Discord server. For those of you who are familiar with Discord, you already know the value of that. But basically, this is where, because we're a decentralized company operating globally, this is our office. Basically, we have no office that you can walk into. So you could walk into our Discord, and that's our office. You could talk directly with the team there, and speak with us as needed. So this will take you to the Wefunder page, which I mentioned. And Wefunder is a crowdfunding platform which has managed many multi-million dollar raises before. They're an excellent platform. I highly recommend, because they're basically managing our filing with the SEC, an entire customer journey as far as investments are concerned. It's as simple as just putting the investment amount here, and then there's all kind of perks and stretch goals that we're doing. So once we reach $500,000 cumulative investment, we're going to be creating a board game. And then once we reach $1 million cumulative investment, we're going to be doing a rave in the desert, massive party to celebrate Bitcoin mining.
I hope I'm invited to that one.
You're absolutely invited, Stephen. Anybody who's got a $100 investment in Wefunder is invited. And then there's perks, basically. So hat at 500, t-shirt at 1,000, that hoodie, and then bathrobe and briefcase. And then the Bitcoin ordinals at 2,500. We're actually producing a Bitcoin oracle called Quantum Badgers. They're pretty awesome. We've hired one of the most amazing artists from NFTs. Her name is Nightman Val, and she's done a great job with the Badgers. So those will be coming soon. But yeah, that's the skinny of it. You want to look into it further, do your research. There's a YouTube playlist where you can see hours and hours of videos that we've done talking about quantum expeditions and questions. But of course, again, if you want to come on the Discord, we're happy to answer any questions that you have personally.
Okay, and I'll leave the links towards the comments section of this video for people to be able to see it. I know you're not able to make any promises on any investments, etc., but do you plan to, as part of the crowdfunding, do you plan to pay dividends if the business permits? So if it's highly profitable, I know you can't commit to amounts and whether it would definitely happen, but is that in your plans for the crowdfunding?
Yeah, not only is it in our plans, but it's essential, right? So the SEC, first of all, does not permit us to promise that we're going to pay dividends. But what I can tell you is that our team is incentivized by that very activity, because one of the ways that we keep our costs low is that most employees of the company are taking either full compensation or partial compensation in equity in the company. So the same thing that people are buying when they participate in the crowdfund, the equity of the company. is what governs the dividend. So if you own 1% of the company, you're getting 1% of the payouts of the company, of those dividends. So our team is just as eager to receive those dividends as the investors are. So our interests are 100% aligned there.
Excellent. Sounds like a really good opportunity. Thanks for outlining that, Mati. I think we've come to the end of the show and the end of our time. But I really want to say thank you to you for participating in this episode. And I think we got some really good insights from you. So I really appreciate that, Mati. Thank you very much. Been a pleasure to have you on.
Well, thanks for having me, man. All right. We'll see you soon.